In 2008, Kim Allen and Scott actually, and Tim Smith, funded Legacy Funding Group, or Legacy Group Funding, actually, to help clients navigate their financial futures, the stuff you never hear unless you're up on the senator's floor, I guess, focusing on specific needs rather than promoting any kind of a brand. So Kim's background is he's just one of us, okay? He studied business at BYU in Idaho, but he came right back here, married Jenny there, brought her back with him, right? And grew up in the farmlands of Delta, just down the street, which is why he really loves just the simple life and being able to accomplish that for you. So family is his top priority. With 3 children and his poodle, of course, named Sig. That would be Sig Sauer, wouldn't it?
It would be, yes.
Oh my gosh. So that's it. And he's received many awards, and his greatest pride lies, of course, in family. But you've probably seen him in all the Jeep Fests, and he's a Glass City crawler, for sure. He's the one that goes up on the wheel. Okay? And, of course, shooting's his sport. He's also a licensed amateur radio operator, but also has served his church all the way into Argentina for the youth. So, but I met Kim a little bit differently. I was in a situation where my partner was having a very long, tough, life-ending medical problem, okay? So I needed to grow extra funds really fast, quickly, and I needed to do it at no risk, and I'm no spring chicken, so this wasn't good. And so I needed 100% fund insured and guaranteed, which even the banks don't give you. My credit union gave you double, but that was about it. And my partner was dying, and it was really an expensive illness. And I needed something that there was never any losses. So that's not exactly what he's gonna cover tonight, but I'm telling you, if you ever wanna know any of that, give me a call and we'll take you to Nancy's for a steak and make sure you have the same advantages too. But he's gonna talk about the One Big Beautiful Bill Act and how this is gonna change you, because he's gonna cover the permanent taxes now that we don't have to vote on every year, I hope, from 2017, the increase in your deductions, the new senior, were you looking at me when you said that?
Not at all.
The new senior deductions and all the permanent exemptions. Let me introduce to you Kim Allen of Legacy. Kim Allen.
Thank you. She's very, very kind. Yes, I do come from Delta. In fact, when I got married and moved out of the house, I moved a mile down the road. Behind my house is a soybean field. And, I loved life out in the country and keeping things very, very simple. That's our specialty at Legacy Group Planning. I've been assisting people with financial decisions since 1993. I started Legacy Group Planning with my partners in 2010 because what we were seeing happening in the financial world was things that we were very concerned with. And we wanted to do things a little bit different and offer people options without being told what we had to do. Most financial advisors have people above them that say, hey, you need to sell this or that, or do things this particular way. I don't have anybody telling me what to do except for the members at Legacy Group Planning. So at Legacy Group Planning, all of the people we do business with are members at Legacy Group Planning. We have a lot of them here in this room. We appreciate our members quite a bit. In fact, a reminder to members here tonight, make sure you register for your pie because registration closes this week. We give away over 800 pies the week of Thanksgiving to members who would like them. We love that they will invite us to their family dinner in the form of a pie that we get to share. And I promise they're big enough to have at least 2 pieces, okay? So that's important. Let's move on here. Let's see. Today, Veterans Day, what a wonderful day. Both of my grandfathers served in World War II. And I'm surely grateful for what they taught me about what it means to be an American. In fact, I devoted many, many years to an organization that you may have heard of before. Raise your hand if you've ever heard of the Boy Scouts of America. Have you heard of them? Okay. I love scouting. I've been a scoutmaster. I'm a wood badger, fox patrol all the way. Which patrol are you? Huh? Beaver. Okay, well, maybe he can't be a fox. But anyway, I know that Bill's a wood badger too. My son is an Eagle Scout. I have one son, 2 daughters. My son is 26 years old. My next oldest is my daughter Megan. She's 24 and going to graduate from college here in December. So we get to go out and see that happen. And my youngest is my daughter Emily, who is 14. She was our surprise. We didn't think it was possible to have more kids. We had to have assistance, fertility, to get our first 2. My wife had a lot of problems. And, a few years, 10 years later, she'd been running marathons and doing all that fun stuff. You can tell I don't participate in that. Okay? But she came home one night and she said, I think I have a hernia. And I'm like, oh boy, you better go get that checked out. That's no fun. I've had those. And so she went to the doctor. She came home from the doctor, and I said, how did it go? Are you having surgery? She said, no hernia. That's the good news. But get ready, because in 4 months, we're going to have a baby. And I'm like, what? How did that happen? She's like, really? So Emily was our big surprise. We'd already gotten rid of all the baby stuff. And, that was a little bit of a task going into I think it was Babies R Us back then that I walked into, and looking around at all this stuff, and I'm thinking, what in the world are we doing here? And I couldn't do it. I didn't buy a single thing. I'm like, honey, let's go home. I'm still wrapping my head around this. But Emily has been a great blessing in our life. I always tell Emily that she is our long-term care plan. She has no idea what that means. I just simply tell her it means there will always be a bedroom in the house for you. Okay? And at 14 years old, that's all she really cares about. I hope she cares about it when I need her, right? But in honor of our veterans here tonight, I'd like to give our veterans an extra ticket. So if you're a veteran, would you raise your hand? Okay? And maybe you can help me, since you're Zach, the volunteer to pass out. Give everybody an extra ticket for the veterans. And if you would, veterans, would you tear off half the ticket and give it back to Zach? He'll come back, or Anna, or whoever. And then I'm gonna do a special drawing for the veterans, just veterans tonight, okay? Now, everybody else, if you haven't had a chance, okay, to get your ticket in this, we're gonna give you a chance before we draw the ticket for the other prizes, okay? But tonight, one of the veterans is going to go home with a 1-ounce bullion bar of silver. And if you don't know about the value of silver, silver has more than doubled in value since the beginning of this year. And you're going to see it continue to rise, okay? So this is an appreciating asset, kind of like your rental properties. And it's something that, well, there's no lead abatement needed, okay? But it can be a good idea to get one of these. So if you're a veteran, I want you to have an extra ticket. We'll get you one. He's getting it over to you. I've got more tickets over here if you run out, okay? We run out. Yeah, over here, over that way, okay? Let's see, how many tickets you got left there, Zach? Few? 4 of them, all right. I think we got 3 over here, right? Everybody else before this was like, yeah, I'm not raising my hand. Now they're like, yeah, I'll raise my hand. I'm a veteran of something.
My dad was in World War II.
Your dad was in World War II? Yeah, yeah.
Where'd you get that?
Actually, I buy a lot of my bullion, gold and silver. Believe it or not, I buy it from Costco.
No, last year I knew they did. Are they still buying it?
And you can sometimes find it in the store itself, okay? But I usually buy it online. In Costco, the cool thing about buying it at Costco is they sell it at spot. So you're getting a really good deal. Plus with my Costco membership, I get like a 2% rebate. Plus with the Costco card, I get another 2%. So I'm actually buying it under spot, so I love that. Okay, do we have all the tickets? Everybody turn in? Okay. Now, if you can't see your number on your ticket, ask your neighbor to read your number for you, okay? You didn't bring your cheater glasses.
I got cheater glasses.
Yeah, Anna has a pair of children. Okay? Shaking them all up here. Who's gonna win the bar of silver? And we have another one, by the way, up here. Maybe they'll go home with 2 of them, right?
Yeah.
By the way, this today is worth about $52.50. Okay, and just look at the spot price. So the winner is ticket ending in 1805. Are the last 4 digits. All right. Congratulations. All right, you are a winner, no matter what they say. Okay.
There's a few people in the audience that haven't turned their tickets in.
Okay. Yeah, we'll make sure everybody gets a chance to turn in the regular tickets up here before we draw those. Okay. Now tonight, I'm talking to you about one of the most boring topics ever. Anna's like, who can I get to come and talk about taxes? And I mean, understand, I don't do people's taxes, okay? I'm a financial advisor. I help people plan for their taxes. I'll help them understand how taxes work, but I don't do taxes for people. I do my own taxes, but I can't do your taxes. I don't want to do your taxes, okay? But I think you should understand what's going on in the tax world because it impacts you as an investor and as an entrepreneur, okay? And a lot of times we can be burying our heads in the sand about some of these issues. And let me assure you that if you do that, you are going to miss out on some money that can be in your pocket. So pay attention to what's going on. You are currently living in the best tax environment you have seen in your lifetime. We are at the lowest tax rates we have seen in 80 years. Now, there might be somebody in the room that's older than 80, okay? But this is the lowest rate we have seen in 80 years. In fact, would you like to guess what the highest tax rate has been for Americans over the last 80 years? What was the highest rate?
40%.
40%, good guess. Any other guesses? Well, over 90. That's maybe the highest it's been in history, but not over the last 80 years. So in the late 70s, early 80s, if you were one of the top earners in our country, the highest tax rate was 76%. So imagine paying 76% income tax rate. That would be absolutely horrible. Does anybody want to guess what the highest tax rate is today? If you're the Bill Gates, Warren Buffett, Jeff Bezos? 37 is exactly right. 37% is the most you can pay in federal taxes no matter how much money you make. That's pretty cool. Now, I realize nobody really wants to pay 37%, but can we agree that the people in 1976 or 78 thought 37 would be really nice, okay? And if you had a crystal ball that worked and you could foresee the future, would you say that taxes are going to go up or are they going to go down?
Down. I think they're going down.
Down? They're the lowest that they've been in 80 years.
I think they're going down.
They're probably going to go up now I hope you're right. I hope they go down, okay? But it's pretty hard to go much lower than what they are right now, okay? But I do believe that when will taxes change? With a new administration. That's when it will change, okay? And so when they tell you that the tax rates are permanent, it's permanent until they're not, okay? So again, take that with a grain of salt. All right, let's move on. So tonight we're going to cover understanding the one big beautiful tax bill. I do have some handouts over here. If you want to go home and read more about it, if I didn't get you to sleep here tonight, then maybe take one of those sheets. If you really struggle falling asleep, take one of those and read it, okay? But there's some good information in there. I think especially for people who are 65 and older, you guys get some additional bonus. I'm a little jealous. I'm only 54. So if you're 65 and older, you're going to get some pretty cool extra stuff starting this year, actually. So that's pretty nice. So let's talk about some of these, the benefits. And this, what I'm doing here tonight, and I've done one of these for our members Over in Perrysburg, we had a gathering, about 400 people, and we talked specifically about how it impacts my members, who a lot of them are either approaching retirement or are retired. Tonight, I'm going to cater this more to our audience here, which I understand that you guys like to have investment properties and rental properties and things of that nature. So tonight, I'm going to cater it to that, okay? But I'll cover a few other things. So this law was passed July 4th, 2025, on the 4th of July. It's called the Big Beautiful Tax Bill. Can you imagine that our president wants to call it the Big Beautiful Tax Bill, right? I can just see him saying, the water here is better, I don't know. It's everything is big and beautiful to him, okay? So appropriately named, okay? So we're gonna talk a little bit about how this gives you some tax relief. I'm gonna cover the main benefits of this bill and some new incentives that it gives you, and especially things that are helpful for real estate investors just like you. All right, make sure my slide is moving along. So here we can see that we're going to talk about the basics of the Big Beautiful Bill. Not every single thing. This was a 950-page bill. If you come to my presentation where we cover all 950 pages, it starts at the exact same time. It just gets over about breakfast time. Okay? Don't come to that presentation. Okay? So tonight we're going to keep it really simple. It builds on prior reforms that have been made, making many provisions permanent until they're not, like lower income tax rates and business deductions. For you guys as rental property owners, whether individuals or small businesses, this means you have a reduced tax burden on rental income, faster write-offs for property improvements, and more cash flow to reinvest. It's a game changer for the real estate sector. It really is. So let's dive in. So now you guys will be getting a qualified business income deduction. So there's a permanent 20% deduction on qualified business income for pass-through entities. How many of you have an LLC or an S Corp? Hopefully all the hands go up, right? If you don't know what that is, you should find out, okay? There's a lot of benefits to having your business structured properly, and this is one of them. How about being able to write off 20% of the income that comes from those sources? So if you have rental properties or other real estate properties, that's huge. You get to keep 20% more of your money in your pocket. Does anybody like having more money in their pocket, right? This is a great way to do that. It applies to rental income if it qualifies as a trade or business. So if you're just personally renting out a room in your home, you don't have it set up as a business, you don't get to take advantage of this. So make sure you structure your business properly. And that's one thing that we can give you some guidance on. I'm sure Anna has people that can help you too, but that's, in my book, a 101. If you're going to be in this business, you should definitely do that. Also, there are some extra limitations that come into play here. Let me find my notes on that. All right. The right page here. The QBI is huge for rental owners with pass-through structures. It will effectively drop your tax rate, okay? If you're in the highest tax rate, 37%, it brings you down to 29.6% overall by using this. So make sure you do that. The extended phase-in means more small landlords benefit fully. This could save thousands annually, freeing up funds for maintenance or new properties. So make sure you consult your tax advisor. Now, many of you have a tax preparer, and I don't want to offend any tax preparers in the room, but many tax preparers talk to you as if they are tax advisors, and there's a difference. Some tax advisors do prepare taxes as well. But a tax advisor helps guide you through all these things. So understand the tax preparer's job is to prepare your tax return and make sure you don't get audited, right? Because they don't make money helping you with an audit. They want to just do your tax return and push you out. Next, do their tax return. Next, and that's a tax preparer. It's a great business model, okay? A tax advisor is to say what loopholes are available to you as a business owner to make sure you give the least amount of taxes to our government as possible. In fact, our current president, one of my favorite quotes of something he said, the most patriotic thing you can do as an American is pay the least amount in taxes as possible. Can you believe that? Yeah. That a president of the United States said that. Why would he think that way?
He's a businessman.
Okay, he's a businessman, but even more than that.
He's a real estate investor.
Yeah, he's a real estate investor. Can we agree that you and I know how to use the tax dollars way better than our government does, right? Yeah. I don't raise your hand if you are really passionate about studying the Amazonian tree frog and to see if they're homosexual or not. Oh, yeah. No, I could care less if that's, I don't want to send that group or organization any money of our tax dollars, okay? How does that benefit me? But when you hold those tax dollars and you go to Home Depot and you buy more paint and stain and lumber, or you buy another rental property, guess where that money's going? It's going right back into the economy. You are giving somebody a job. You are providing resources to other people. And you are way better at investing tax dollars every day of the week than Uncle Sam. So I wholeheartedly agree that the most patriotic thing you can do is pay the least amount in taxes as possible. When I was 20 years old, well, in my 20s, a little older than 30 years old, but in my 20s, when I started my first real business, I hired a tax consultant out of Chicago and brought him in because I realized after my first year that I was pretty much working for Uncle Sam with the amount of money that they took out of my pocket. In between federal, state, and local, I'm like, how does this work? They end up with more money than me, and yet I did all the work. That doesn't make any sense to me. This can't be how this system works, can it? And I thought, I have to figure this out. I paid a firm $20,000. Back then, that was a lot of money to come into my business and look at what I was doing. And they wrote me a book about that thick with all the tax codes that I could take advantage of in my business. And I've been practicing this principle my entire business career. Now, when I do my taxes, they at the end of the tax process, there's like an audit meter. Have you ever had one of those where, like, you're good, you're not going to get audited? Do you know why it says that when it's in the green? Because you're paying a lot in taxes, okay? Whereas for me, it's always pegged to the other side to say, we can't go further. You're probably gonna get audited, is what that means for Kim, right? I'm always gonna probably get audited. I've been audited 3 times, by the way. 3 times. And it was a piece of cake every single time. Do you know why it was easy? Because I know exactly what I'm doing. I know that I'm using the proper tax codes to do this. I just had to show them. And they're like, oh, this guy knows what he's doing. And so it was simple, okay? So again, I can't get you out of paying taxes without going to jail, okay? We all have to pay some taxes. I'm okay with that, all right? By the way, I don't know, this is kind of an off topic, but I believe that property taxes should be totally illegal and banned. There's no reason that we should have property taxes here in our country, okay? I want to have roads to drive on, schools for our children. I want to have social services available, but they need to collect the tax differently. Because do I ever really own my farm? I have no debt on my farm, but I do. Who's my mortgage holder? The county, the town, the school district, all of them.
have their hand out. And if I don't pay them, what are they gonna do? Come take it from me, even though I don't owe anything on my property. You see how wrong that is? It's an ethical thing for me. I'm not against paying taxes. I'm against how they're collecting the taxes. And we all need to stand united in that. And I think our soon-to-be new governor in Ohio, the next time around, I hope, will get that fixed, okay?
Are they talking about it?
But yes, in fact, I'm talking to them about it.
That's awesome.
So I do a lot pertaining to these subjects. I've actually been in Washington, D.C., where I testified in the Senate Finance Committee about what they were doing. I stood before the Senate and I told them that they are the biggest perpetrators of elder financial abuse in our country. That they were. That went over well. Anyway, that's a conversation for another day. But we were able to get some reform done because of that, okay? And I think we need to do that here in the state of Ohio as well. And I'd be happy to go to Columbus and tell them what I think. Hopefully they'll listen, right? Okay, yes. So we all need to stand united on that. Okay, next up, let's see. Enhanced depreciation. How about this one? I love this one, okay? And this applies to if you have a business, okay? And if you own a rental property and it's structured properly, you own a business. You get to deduct 100% of the equipment that you purchase for your business. What's the limit? Well, $2.5 million.
Wow. Time to buy a car.
Yes, exactly. If you buy a vehicle for your business, how much of it can you deduct? 100%. How long do you have to wait to deduct it? You don't have to wait. You can deduct it. Okay? So here's another principle of what we were talking about. Who's the best at spending tax dollars? You are. So if you're going to pay taxes to Uncle Sam, when he's giving you this opportunity, I'm going to say, why are you paying any taxes? Would you rather write a check to Uncle Sam for some money, or would you rather have, I don't know, a new copier? Would you rather have some new tools? What would you rather have? Something that you and your business can benefit from? Or do you want to, you do know the IRS will accept a donation. So I pretty much look at people who live in the real estate world. If you are paying taxes, you are doing something wrong. Because you know what I'll do? I would go out and buy a whole nother car for my business rather than sending it to DC. I'd park it in the driveway. I don't care. I would go out and buy 200 toolkits from Home Depot rather than write a check to the IRS. That's what I would rather do, okay? And you can find other things to spend your money on. But if you are given the ability to spend your tax dollars, would you do it?
Yes.
They have given you the ability to do that. You can do that this year. So this is really cool. It's effective for 2025, all right? So make sure you take advantage of that. Section 179 is the code of the IRS law that says you can expense that stuff out. Now it is phased out at $4 million, okay? So if you need to buy a lot of vehicles, you're limited, okay, Zach? 4 million is the cutoff.
Keep it in
all right? Just make sure you understand.
Your company name or should it be your personal name?
If you should have a company name, yep, you should have it run through your business. So when you write out the check for that new copier, who's it going to be written from? Your business account, okay? Yep. And so there's a lot of things that you can take advantage of. How many of you in your business have a uniform policy? What does that mean, a uniform policy? Have you ever seen a company that wears a uniform, makes their employees wear a uniform? Can anybody name a company that does that?
All of them.
UPS? Did they? Yep. Even Home Depot, they have an apron on, right? Do you suppose that UPS, Home Depot, and any company that makes their employees wear a uniform, that they can deduct the value or the cost of that uniform?
Yeah.
Okay. How many companies are allowed to write a uniform policy? Every single company out there can. I have a uniform policy for my business. This is my uniform. I get to deduct my shoes, my fancy patriotic socks. That because guess what? My boss told me I had to wear a uniform to work. Guess who my boss is? You're looking at him. So I would rather take my tax dollars and spend it on silly clothes than write a check to the IRS. That's just one example, right?
I mean, does
Okay.
it have to have your logo on it?
Doesn't? No.
So you can literally just go buy a pair of shoes you like.
Is the logo of, let's say, your local hospital, is it on all the, the nurses' uniforms and stuff, or are they just wearing colored
It
scrubs?
could just be like uniform polo shirt.
That's right. It could be anything you want. Whatever you're wearing, you can just say, this is my uniform policy, I have to wear these clothes, and you get to decide from one day to the next, whatever that could be. It could be jeans, it could be a suit and tie, it could be whatever you want. Zach can deduct his hat. That's a pretty cool hat, Zach, okay?
So you have to write it down though?
You just have to, yeah, you
If
have to,
write it
so
down.
understand that if you get audited, the IRS agent might say, do you have a uniform policy? I see you're deducting uniforms. Well, absolutely, I do.
Yeah.
Okay.
Is this what the tax advisor will help us with?
I hope so, but most tax preparers never tell you these things, okay? And that's one of the difference. If you're not hearing this from the person who prepares your taxes, what are they in business to do? Prepare taxes, not give you tax advice per se. I'm not saying they won't give you any tax advice, but do you think they want to push the envelope with that uniform policy? Nah, they don't. Because they like, oh, well, that might cause a check with the IRS. I literally feed thousands of people each year. Do I do that? Anybody been in one of my dinners? So, I deduct all of the cost of those meals. I literally take my tax dollars that I would have to pay to Uncle Sam, and I feed thousands of people. I would rather do that than write the IRS a check. You guys get to enjoy a nice steak dinner, right? I mean, that's pretty cool. So that's a good thing. So use your money for you, okay? By having this, it accelerates cost recovery for rental property upgrades. If you can deduct the cost of putting a new toilet in that rental property, is that a good thing? And you don't have to depreciate it. Windows, roofs, anything like that. Would you rather have your tax dollars pay for it or not? You get to do that. So you have more cash flow because you have access to those tax dollars. All right, let's move on. SALT and interest deduction. If you're not familiar with what the SALT deduction is, this is a deduction that primarily came out of high tax states. States, mostly coastal states. But even though the people in California and New York wanted this deduction, we get to use it too. They may pay more property taxes and local taxes than you or I. But you get to deduct what you have to pay in those taxes. So you can literally use your federal tax dollars to pay for your property taxes and your local school district taxes and the city tax and all that kind of stuff. That's what the SALT deduction is all about. Now, the cap is $40,000. That's 40 grand, okay? Yeah.
That's for your personal residence?
It also applies for your personal residence. Yes, this isn't just business. So this applies even if you don't have a business. Every person in our country can deduct up to $40,000 of their property, their state and local income tax from their federal tax return. So again, if you don't have other ways to spend your tax dollars, I guess pay your local taxes.
It used to be 10,000?
Yes. Isn't that cool? 4 times the amount now. Now, again, in our area, maybe some people would have trouble getting to 10,000, but I would assume that if you have multiple properties, you're probably not gonna have much trouble getting to that level, right? So that's kind of nice that it expands to that. So business owners with high property taxes benefit from this. Business interest deduction is another one. If you are financing properties, you get to deduct the interest from that cost of financing. So again, ways that you can spend those federal dollar limits. Now, there's a permanent $750,000 limit on qualified residence interest for mortgages. $750,000. That's the limit. So if you have property that's gonna be, more than 750,000, limit it up to that. Okay, so maybe you have $2 million worth of properties that you're financing, you're not gonna get to deduct it all, but up to $750,000 worth. Okay? Reduces borrowing costs for rental financing when you can deduct that interest. I love that. Okay? How would you like to be able to deduct the new HVAC system that you just had to put in the rental property? Use tax dollars to pay for that. Would that make that pill a little harder to swallow or easier? Easier to swallow that pill for sure. Okay? So make sure you take advantage of that. So did I miss anything on the salt?
Can you explain the salt thing again?
Sure.
Dumb it down a little bit for me.
Okay. So do you know how you write out a check to your county for property taxes?
Yeah.
Yep, that can be paid for through your federal tax return. Now you have to pay for it first, right? But anything that I've paid for in the previous year for state, local, or federal, or not federal, state, local, municipal taxes, save your receipts, I get to deduct that from my federal tax return. So if I owe the federal government $40,000, I can use some of that $40,000 to pay those taxes or get reimbursed from the government for the taxes I paid. Does that make sense? Yes.
And that basically reduces your taxable income.
It does. Yes, and it reduces how much you're gonna, so when we look at tax brackets, the 37% being the higher amount, how do you get into lower tax brackets? Use all of those deductions and you're wiping out that income, okay? Why did Donald Trump not want his tax returns revealed? Not because he was doing something wrong.
Because he looks poor.
Because yeah, he looks poor on paper. They're like, how did this guy pay so little in taxes, but he makes so much money? Because he's got tax advisors working for him saying, here's a loophole, here's a loophole. Oh, you like gold? Guess what we're gonna mandate? We're gonna have a policy that things have to be colored gold. For goodness sakes, he's got a uniform policy for sure, okay? So again, take advantage of that. Just because the wealthy are doing it doesn't mean that you can't do it too. They're the ones that created these loopholes. Who did they create them for? For themselves and their rich cronies, okay? It's not for you. But if you know how to use it, use it. I've been doing it for years, for decades, okay? I don't want you to see my tax return either. All right. Okay, I don't know if anybody here falls into this. Low-income housing tax credit, it's a 12% increase in allocations. I have no idea what it was before. You guys might know that. So there's a lower bond threshold if you're doing any of that. I assume that has to do with renting for HUD and things of that nature. So you get some nice bonuses with this tax bill that applies to you. Opportunity zones become permanent. So you can get to defer capital gains up to 30% basis step up in rural areas. So that's meaning, hey, we know that you love Toledo, but maybe you should consider going a little bit outside that realm. Yes?
All of Toledo is now an opportunity zone.
Sweetness. That's great.
We had that 3 meetings ago.
So again, you get to defer capital gains up to 30%. So when you sell a property and you make some money on that property, you get to defer 30% of those capital gains on that property because you're in an opportunity zone. But if your tax preparer has no clue that this is a thing, do you think they're going to automatically just do this for you? Probably not. So make sure that you have a tax preparer that's getting the proper tax advice. What I find is even if a tax preparer understands these things, a lot of times they don't want to use them because you're operating on the fringes of the tax code. I live on the fringes of the tax code. It's the place where the wealthy live, okay? But if you don't want to be harassed, you don't want to get a letter by the IRS and it scares you to death, here's what you should do. Pay a lot of taxes. It's real simple, okay? It's like paying off the mom. Just give them money, all right? Higher 1099K thresholds. Did you get your 1099Ks last year? Anybody get those? Oh my gosh, what a pain in the butt. I'm glad they fixed that. So now there's no 1099K required for $20,000. What does this mean? If you have a renter who is paying you via Venmo, you're like, man, this is nice. I get my money right away, and they just Venmo me with that app or PayPal or whatever it means. Before they had to give you a 1099K, and you had to file that darn thing. Now that doesn't kick in until they've given you 20 grand. So isn't that nice?
That right there is worth coming.
Oh, okay. Well, we got a winner right there, okay? So obviously that simplifies reporting for rental payments. When I got all my 1099Ks last year, I'm thinking, what in the world? They just want to make me do more work on my taxes. Yes.
I don't think that applies though to if I hire a contractor, I think that's going up to 2,000.
Now, if you're paying,
For the limit, when you have to give them right now, $600.
right.
But I think that's.
So yeah, this is not a 1099. Okay, you're talking about the regular 1099. The 1099K pertains to payments. So this is like, let's say that you were operating a craft business and you went around to farmers markets and people were buying your crafts with, the Venmo app. Venmo will send you a 1099K saying, hey, you received this much money through your Venmo. Okay, so this is cool that now you don't have that threshold where I think it was $600 last year, something like that. Okay, so in a contractor, here's what I would tell you. Help your contractor get an LLC. Because if I pay an LLC, do I have to file a 1099? No 1099 at all. Okay, if you write a check to a business, otherwise, and a lot of people are like, what? That doesn't make any sense. Well, think of it this way. Is your electric company a business? Do you pay them more than $600 a year? If you don't, I need to know what you're doing, okay? But yes, you don't write them a 1099 to the electric company or your cell phone carrier, or, why is that? They're a business, that's why. That applies to every business, not just them. So again, be smart about that stuff. Estate tax exemption, this is a cool one. I use this a lot for my members at Legacy Group Planning. The exemption now is $15 million. What does that mean? This allows you to structure inheritance for your kids, your family, and they don't have to pay taxes, gift taxes, and estate taxes on that limit. Now this is $15 million per person. So a lot of people ask me all the time, Kim, what's the limit of how much I could write a check to my kid for? If I give them money at Christmas, what's that limit? And right now it's right around $18,000. How about this? Instead of giving them a gift when you want to write them a check, on the memo, you know how your check has a memo on there? Just write the word inheritance, because it's a lifetime limit of $15 million. Once you get to $15 million and above that you've given to your children per child, then they need to start filing they have to pay estate taxes on that. Okay? But I think 15 million pretty much covers most people, not everybody, okay? But it covers most. And this is huge. It just simplifies everything. So whenever you give your kids money, I don't care if you want to call it cash, just tell your kid, here's part of your inheritance. They'll think you're joking, but you're serious, okay? Because if you ever get audited and they're like, hey, I saw that you gave Johnny, $40,000 to help him get a car, but I didn't see that on Johnny's tax return. You're going to say that's because that was part of Johnny's inheritance, his lifetime inheritance. Oh, okay. And they move on. It's that simple. So that got locked in at 15 million. Again, this encourages investment in underserved properties by putting more money into your guys' into your hands. I love that. Okay. Next. This has nothing to do with taxes and everything to do with saving the money you work so hard to earn. At Legacy Group Planning, the only way that somebody becomes a member is if they agree to keep some of their money in a place where they can never lose a single penny. If I could show you a way that you could invest some money, grow with the market, and never lose a dime, would you want to know how to do that?
Yes.
All of our members, are you doing that right now?
Yes.
I mean, it sounds way too good to be true. I realize this. It's one of the biggest hurdles that I have to overcome. And it's why sometimes people need to come to 4 steak dinners before they really believe me. So this green line is exactly the type of accounts that we set up for people. This account was set up in September 9th, 1999. Now, it follows the market when the market goes up, and if the market goes down, I mean, the market's been crazy. The longest bull run we've ever seen. Raise your hand if you believe that, and at some time in the future, the market will go down. I mean, like, I'm talking like crash down. Do you believe that that might happen? Okay. Was anybody alive in 2008 when we lost 50% of our portfolio? I mean, our portfolios are growing. If your portfolio hasn't been growing massively lately, you need to find somebody else to help you invest your money, okay? Because it's been incredible. But here's the thing that hurts. If we have a 50% decline again in our portfolio, do you know what that does to the wealth of America? I don't know if you really realize what's coming. But when I look at markets that have to do with metals, gold, silver, it's a precursor. And I don't sell gold and silver. I just give it away, okay? I love to buy it, but I don't sell it. I have it in my portfolio as part of my investments. But when I see something like this double in value in a year, guess what's coming to all the other commodities that are out there? You're going to see a crazy thing happening in the market. And a lot of it's going to be not driven by inflation like you think, but it's going to be driven by other things like AI. What we're seeing with the impact of what AI can do in the markets is crazy. I've been one of the testers of these AI models. And when AI is constantly aware, it knows what's going on all across the world. It never sleeps, it never takes a vacation, and it can connect things in real time. What happens in Russia or NATO to what happens here, it's insane what it can do. What you're going to see happen is the people who have wealth are going to become exponentially wealthier. The wealth gap in our country will become not just a gap, it will become a massive canyon. And what our country has done to the young people, especially in our country, is we've convinced them to go into debt. Go ahead and take out that student loan. I know you love to cook. Go to culinary arts school. I had one of our members come in because they were trying to figure out, how do I get off my kid's student loan? They can't do it. I'm like, your kid got a degree in culinary arts. Where do they work? Burger King. I'm like, okay, yeah, that's not a good deal. But we see this happen all the time. Did you know that we have more credit card debt in our country today than ever before in history? So you're going to see a group of people who have no money, who have no wealth. And what's going to happen to their wealth? It's going to stay put because they won't have anything to invest. And then you're going to see the group of people like you who are smart enough to say, I need to invest money. I need to make some money. I need to live below my means so that I have wealth. And they're going to just see their wealth grow exponentially fast with the help of AI. Okay? Now, you're going to see a big shakeup in the financial world because you're going to have most of the major brokerage houses reject this. They're going to try to stop it. There's a big financial incentive for them to not allow AI to assist in investing. Because if AI can do a better job than your broker, why do you need to pay your broker? Is that true? So again, you're going to see a large push to stop that from coming into the market. We've been conditioned in our country to believe that we should invest our money in tax-deferred investments. IRAs, 401ks, 403bs, TSP, deferred comp, all that kind of stuff. If taxes are the lowest they've been in 80 years, when's the best time to pay taxes? There is no better time than now. I don't want to pay taxes, but now's the best time. Didn't I show you some ways that you can spend your taxes instead of just sending it in to Uncle Sam? I absolutely did. Take advantage of that. If you have IRAs, if you have 401ks, if you have any of that kind of money, you don't fall asleep at the wheel. You are missing the boat because our current administration is trying to tell you, shake you awake and say, listen, you need to pay taxes on some of this money now and do it strategically. Because if you're 65 and older right now, literally our government is giving you $12,000 more to take advantage of the tax code. If you saw $12,000 laying on the ground, raise your hand if you'd pick it up. Okay. It's simple. And if you're like me and you're not 65, well, you can be jealous, but help those people that don't know about this. And what would I do with my money that I want to keep safe and protected for the future? I'd probably try to find something like this. Now, I'm not going to put all my money in this. I have money in the stock market. I love the stock market. Do I have money in gold and silver too?
Yes.
Okay. I love these too. It's part of a great portfolio. I own real estate. I own a farm. I farm ground. I believe that there's a lot of ways that we can make money. Okay? This is one of them. When it's time, a good gambler takes money off the table, right? Where do I put my money that I've taken off the table? In a place where I can never lose.
What's the interest rate, like return? One was 3%.
Well, thank you for that question. How about this? When you open up one of these accounts right now, these companies are being so aggressive because of what they can do in the bond market. Understand that you're putting money into some of these investments and giving your money to these companies for a period of time, somewhere between 5 to 10 years. That's a long time, right? It doesn't mean you can't take some of your money out and spend it, but you're going to get in bed with a financial company. They know that you're going to do that, and they're going to put their money where their mouth is. How about to the tune of 25 to 50%? Meaning you open one of these accounts and day one, they match your deposit with 25 to 50% match just for opening up the account. I had somebody today open up one of these and they got a 30% match on the money that they put into the account. Imagine putting $100,000 even into one of these and you start off with $130,000. If you saw $30,000 on the ground, would you pick it up? Okay, it's that simple. Now, a lot of people don't believe this, right? Hannah, is this true? Go ahead, Dave, is this true? Do they really give you that kind of money?
Yep.
Okay. And I'll get you your silver bar afterwards.
I don't know what FIA means. What is the green line? What's the green line?
So that's that green line account is going to be a fixed index annuity. These are specialized annuities that are designed to do that. Now I'll be honest with you, I hate most annuities because most annuities in our country today are called variable annuities. They're horrible. They're expensive. If you have a variable annuity, you should call my office. I'll see if I can help you fix it. But these are specialized ones. There's only a handful of companies that even offer them. So that's the one that will do that, the green one. Okay? And there's a variety of them. Yeah.
Is there a maximum on how much you can put in?
Yeah, so depending on the company, typically the maximum is about $3 million per account. We can get approval for more, or we can just use more accounts.
And how do you know where you fall on the 25 to 50? Is it the lotto ticket?
No, it's not. No, you get to pick. So each account has different features, benefits, how you can consume the money, things of that nature. And so some companies are just more aggressive on that they want you in their account, so they're willing to give you more. But there's obviously going to be some catches. Tonight I'm not here to cover all those catches, but when we get together, I'll show you everything, right? I have nothing to hide. If it's right for you, it's right for you. If it's not, it's not. And for those of you who have been to my dinners, do I twist your arm?
No.
Okay. Do I ever you've been to my dinner once, you're never coming back again? No, I don't do that. Anna probably came and ate my meal 20 times before she came. Dave was probably 30, okay? And that's okay. So, no, it's if it's right, it's right. I hope you realize that, okay? All right, so act now. Review your structure and investments for 2025. Here's the one thing I don't have. I don't have a time machine. If you don't take advantage of what's going on, you're going to miss out on 2025. How far are we from 2025 being over?
6 weeks.
It's right around the corner. Now, there's 4 years of bonuses for all of you who are 65 and older, by the way. 4 years that you get extra money. This is the first year of the 4. If you don't take advantage of it this year, I can't go backwards in time and say, oh, you missed out on your $12,000, you forgot to pick it up on the sidewalk. You need to do that, okay? Well, let alone all your other business deductions, put those things in order. If you don't have it structured right, do that. If you need help, personalized advice for this, you can call me. I've got my phone number on this material up here. Take a pen, it's got my phone number on it. You can call me, we'll get together. What does every member at Legacy Group Planning have? In order to become a member, it requires what? It requires a Green Line account. It requires your commitment to keep some of your money safe.
How much you keep in there?
How much do you keep in there?
Yes.
You can put $3 million in if you want.
I don't know.
Okay. I'll make an exception. We'll do $4 million for you, okay? All right? So no, you can put as much as you want in there. All right? So, any other questions? We've had some good ones.
I think he was asking the minimum.
Oh, minimums. Minimums, 20 grand. 20 grand. $20,000.
Okay, no
Yeah.
problem.
It'll be the most expensive pie you've ever bought for Thanksgiving.
Wait, gotta use the microphone.
They know I'm hard of hearing.
These insurance products, do they mimic, selling grain using puts and calls?
So in a way, yes, I can lock in gains mid-year. Typically, a lot of the products are driven by their anniversary date each year. That's when your interest dumps in. But some of them, we're seeing hybrids where, let's say we have a particular gain or amount that you want to say, hey, if that account hits 9%, lock that in for me. And even if I'm on the beach in Costa Rica and you're in Hawaii, it can do it automatically, okay?
What are your fees and charges?
Okay, well, write this down, how much it costs to have money in the Green Line. In fact, how about we just have the members at Legacy Group Planning tell you. Members, how much does it cost to have your money in the Green Line?
Nothing.
What? Dang it. So that begs the question, how do I get paid, right? I mean, I know you guys are really concerned about that. Thank you. Thank you for that. For Emily, yes. So I get paid the same way your banker does. When you go into the bank and you open up a checking or savings account, who pays that person behind the counter? Oh, did you know that the bank doesn't have a stack of cash in their vault with your name on it? I was baffled. I'm like, I want to see my money. We're like, we don't have it. I'm like, well, where is it? We're like, well, we loaned it out. Somebody bought a car. Somebody bought a house. Somebody bought a business. I don't know. They make money off your money. Did you know your bank makes money off your money?
Yes.
Yeah. In a similar fashion, when you put money into the Green Line, which is backed by an insurance company, by the way, insured way better than your bank, pays you more interest than your bank every day of the week, they're holding your money. And they hold billions of dollars of other people's money. If you could make just a couple tenths of a percent on billions of dollars that don't even belong to you, would that be a lot of money? So they pay me out of their profits, not out of your money. Raise your hand if you're okay if somebody else pays the bill. If you're not okay with that, okay, let me know, and we can work some other arrangement out, all right? All right, but that's, other question, yeah.
Wait for Fana.
Yeah.
One more question. Are you able to, if you put the money in on the Green Line, are you able to utilize that money to buy real estate with like a self-directed IRA situation? Or is it locked in there and you can't touch it for X amount of years? How does that work?
So yeah, that's a great question. And so this money, you can take money out of the account to buy real estate, but the money that's sitting in there can't be like, hey, I have an annuity that's sitting in 410 Parkwood Street, right? That doesn't exist. But you can take money out and buy real estate with it. Typically what I find in this market here is the people that want to say, as I transition out of some of my properties, where do I put that money? Or I had a really good offer on this property, what do I do with that? I want to take some of the winnings off the table. So I would not put the money that you're using to buy real estate into these accounts, but the money that you want to use for the future, this is what I would do. In fact, all of these accounts can generate a lifetime income. So one of the reasons that you guys, or the main reason that you invest in real estate, is because you want to have your assets earn income for you, right? Generate money. And usually if you're going to be an investor in real estate, you want it to be to the tune of about 8%, that you're getting an 8% return off of that investment every single year. When you do that with real estate, are there some headaches that may come along the way with it? No. Oh, okay. There's a few. Now, you're probably not going to get 8% annually off of one of these kind of investments. But imagine an investment that has no headaches. It just does its job, and it generates and cranks out somewhere between 5 to 6% every single year. Would you take a little bit less in order to have no headaches? Yes.
Hi, wait.
Oh, do I need a microphone?
Yeah, because it's on Zoom.
Oh, okay. Hi, you said that, as your example, $100,000 and that it would be worth 130.
Yes.
How long does it have to be seasoned before you could draw on that?
It's 12 months.
12 months?
Yep. Mhm.
Okay.
12 months is typical. Now, some accounts you can do it right away. Depends on the account.
Right, you mentioned you had various accounts that do different things.
Yep.
Okay, so it has to, let's just say typically a year, and then could you draw on it like an income, like a quarterly, a monthly, or something like that?
All of the above. Yes, absolutely.
Okay, thank you.
Yep.
I have two questions.
Okay.
Do you pay taxes on the earnings from something like that?
Good question. So obviously, if you're going to roll over, say, an IRA or a 401k into one of these that's already tax deferred, we can keep it tax deferred, and you keep kicking the can down the road. But what do you suppose Kim's going to tell you?
Pay the taxes.
Yeah, I would. So what we might do is say, okay, we're going to roll that IRA over for you, but I don't want you to pay $500,000 or taxes on $500,000 because you're doing a conversion or something, right? We'll do it at the pace that's appropriate for you. I always want to leverage your money, making sure that we maximize tax brackets. So if you're in the, let's say, the 22% bracket, and you have a cushion of $40,000 before you get to the 24% bracket, well, maybe we should consider harvesting, $20,000 and pay the taxes on it, and that's cheap, right? So don't miss out, okay? So we'll help you do that. So a lot of my members will convert money within the account, and Uncle Sam's just saying, pay me my taxes, and now it's tax-free. And I love tax-free versions of that. Imagine having your money in the green line and it grows completely tax-free. There's one of those. That's a whole nother conversation, okay? But those are fantastic as well. Yeah.
That was my other question. So if you're using a self-directed IRA that is a Roth,
Mm-hmm.
you
Tax-free,
could use
stays
it
tax-free,
for something
yes.
like this, and then you've already paid the taxes.
You got it. And it grows. Now, if you get a 30% match or a 50% match on your Roth, how much do you pay in taxes on that?
Should be none.
That's exactly right. Thank you. Yes. I love that.
Oh, I'm sorry.
One of the things, Ken, that I didn't hear you mention yet, but was a big thing for me, the interest of the Streamline, was the long-term health care benefits, because, I'm getting older, my wife's getting older. We look at that stuff, we've seen our parents go through that. And the fact that they double your money for long-term care was a big factor in mine.
Okay. So not all accounts do that, just disclaimer, right? Okay, I don't know if that's right for you. I have some of these Greenline accounts that don't do that, okay? But the one they have, it gives them twice as much money if they end up with a long-term care situation at home. Or if you want to go to the assisted living where the cookies are good, right? Or if you end up in a nursing home where, sometimes they have bingo, okay? But any of those situations, yes, they would have twice as much money to help them cover some of that cost. And sometimes what I see is it may not pay for all of it. It depends obviously on how much is in there, but it might be the difference maker of you being able to stay at home versus going to a facility because you have extra money to do home modifications or hire a family member, whoever you want, right? Good comment. Anybody else with a question? Over here. We're going to go to the breakfast presentation here pretty soon.
I'm assuming this is insurance, so would you need to qualify and go through medical?
It's a great question. Yeah, how many health questions did you guys have to answer? 0. Oh, none. Isn't that cool? Yeah, no health questions, yeah. So I love that, that on those particular accounts. Now I do have some, if you want extra, more enhanced. I'm not a big believer in long-term care insurance, believe it or not. I'm a big believer in proper estate planning. So I've never had a single one of my members who's gone into a long-term care facility ever lose more than 20% of the value of their assets. It's never happened. I've never had one lose everything. The horror stories that you hear about are the people who don't have any advisors in their life. Okay?
The only reason I got.
Anna?
Kick on your microphone. You should turn hers on.
Oh, yeah.
The only thing that pushed me into the system to first try it is because my partner had extreme health care, which was very, very expensive out of pocket. And the fact that he didn't make it, but this took care of him until it did, which was
certainly gave you a lot of peace of mind knowing that those resources were there. I always thought it was the steak dinner.
I can't eat salmon. But the salmon's good too.
The salmon is good. Yeah, we'll give you salmon. Okay. Good questions, guys. Any others? Obviously, everybody's situation is different. And I just want to put a disclaimer out there. I mean, even though I showed you the green line, it's not the only thing I do. I love the stock market. We'll help you invest in the stock market too. Okay? I think it's appropriate to have some of your money there. I think it's appropriate to have some of your money in a safe place. I think it's appropriate to have some of your money in real estate. I love real estate. You guys are doing a fantastic job. It's a service. I mean, you guys are providing a service that needs to be out there. So don't stop investing in real estate just because you learned about the green line. I've never had somebody do that yet. Okay? It's still a great thing to be in real estate. I saw one other, okay. Cool. Let's do some drawings. Is that okay?
And can I ask,
Yeah.
are you gonna go to Door Street Cafe with us in case somebody has some more questions?
Probably not.
Oh.
I know.
So we'll have to come to the state dinner.
I've got appointments in the morning. This time of the year is the busiest time. And believe it or not, I left the house early this morning. I still have a 14-year-old that I really love to see. So I would like to go home and see her if you don't mind. So, but I would love to join you. And I'm honored, absolutely honored that Anna would have me come here and talk to you guys. I've talked to you guys before, but we love Rhea. We've been connected with you guys for quite some time. And I think you guys are doing a wonderful, wonderful thing. But I want to do some drawings
Is there
here.
anybody else that didn't get their ticket?
Yeah, if you haven't gotten your ticket up in here, make sure you do that, okay?
What you say, Silverberg? Yeah. Okay.
I love giving some stuff away. At some of our other events, do we ever give anything away?
everyone.
Okay, we give away a lot, yeah. TVs and we gave away an e-bike one time, yeah.
Yeah. We use it to get people back in their seats on time, right guys?
You haven't got one yet? Oh, but you got the other half of your ticket? Oh, okay. Yeah, keep one half of your ticket, okay? If you put both halves in there, you're not gonna know if you won. Did everybody see on this ticket, it says, keep this coupon?
No, it didn't.
In Spanish, that's guarda este oferta.
They want to know if you have handouts.
Oh, yes, up here on the table. So I didn't hand them out to everybody because, they're probably boring. But if you feel like you want one, now, some of the stuff in here that I printed and put together, if you're 65 and older, this is really going to be applicable. There's some more details that I didn't cover necessarily in here. So, and then this also, even if you're younger, like for example, if you have a baby, you're not having any more babies, then you get $2,000 for your baby that they'll set up in an education account for you. So if you have kids that are married like me, I'm encouraging them to have babies. Because I want grandbabies. I don't have any grandbabies yet. I hear they're awesome. Is that true?
Yes. So are the great grand ones.
No.
We can hand those out at the doors.
Okay, yeah, sure. I've got a card here that talks about our member benefits, all the benefits that our members get. We assist with a lot of things beyond what we talked about here tonight. You can scan that and see what people say about us. And yeah, pretty easy. Okay? All right, let's draw. Everybody got their ticket in?
Last call.
Last call. Appreciating asset here. All right, let's start with our wine and dine package. This is compliments of Cooper's Hawk. We do a lot of dinners over there. So they give me, I guess they sent me a key. I have to unlock these things. Usually I have my whole marketing department here doing this. Let's see if we can do this right now. Oh, there it is. There they go. All right, where's my cup? Over here. Get rid of the veterans tickets. Congratulations to the winner there. I have 20 tickets of my own in here.
Yeah.
All right, here we go. Wine and dine. No name on the ticket, okay? So, ticket ends in 1826.
Oh my God, that's me. I can't believe I won something.
And
Oh my
they,
God, I never win.
they were always telling me you're
I
the
never
most
win.
unluckiest person in the world.
I am.
You are a winner. I don't care what they say.
I won.
No,
I can't
nobody
believe
ever
it. Double
told me.
check it, I don't
I'm
believe
just
it.
teasing.
I never win it.
Here, I'm gonna put this in there. Don't drink this all at one time, okay? Unless, you might want to after tonight, I don't know. Congratulations, okay? All right, next up. Back together. Believe it or not, I cannot find these bars of silver on Costco anymore. They get snatched up so fast. The minute they put them on there, there's people that are just watching their website like crazy. And by the time I get on there, they're gone. So if you don't like silver and you win it, you can go cash it in. You get some money for it, right? Right on the grocery, Toledo Coin, they'll give you cash. Should I do a dance?
Yes.
You don't want to see that. All right, and the winner is the ticket that ends in 1853. 1853.
Dave.
Yep, it even has names, but none of that. Congratulations, Dave. All right. Thank you, guys. I appreciate you giving me an opportunity to be here.